So the UK official growth forecast has been cut to 1.4% from 1.9%. Now, this is for the year 2026. Of course, there'll be other estimates, other data to get on other years. We usually get a full suite of renewed data from the OBR, but that's the one that seems to have moved markets. And also keeping in mind what we saw there on that V shape in government debt yields, there are a host of other headlines that crossed as well, highlighting really where some of the money is going to come from to create this headroom. So we're seeing a very long period of hold on tax thresholds. So we've had confirmation on income tax thresholds, and certain of those are going to be maintained throughout the Parliament. So perhaps that is one way that she is managing to get in some of this money for creating the headroom. Gambling duties, they're going to be reformed. Taxes on property, so this is properties above £2 million, often dubbed in the media a wealth tax. That seems to be what we are talking about there, but we'll wait to hear Rachel Reeves with the details about how exactly that's going to be applied, because there were various versions of that kind of policy doing the rounds beforehand. An increased tax on dividends by 2 percentage points. So that's something to watch when it comes to stock trading. And there was news on pension contributions above £20,000, NIC's national insurance contributions being applied to those. So we've seen plenty of headlines dropping on the Bloomberg terminal in a real flurry. There's been an apology from the OBR about this technical error. In other news, slightly away from the financial markets, but certainly of relevance because it has to do with welfare spending, the UK is to remove the two-child limit within universal credit, this according to the OBR. And, of course, this has been something that had been very contentious within the Labour Party, and perhaps this is the type of policy that is designed to go down well with backbenchers. So that's some of the headlines that we have right now. They'll continue to drop as everybody works their way through this OBR statement. So the UK budget watchdog apologising, as I mentioned earlier on, for the fiscal reports arriving earlier. Now, one person who seemed to be a little confused as to what happening was the Prime Minister, who was busy doing Prime Minister's questions when these lines from the OBR crossed. And those PMQs, Prime Minister's questions, currently underway. The Labour leader, Keir Starmer, is taking questions, as is usual on a Wednesday, from MPs in the House of Commons. It was supposed to be all in the run-up to the budget, but it has been slightly sidetracked and distracted by the budget. Of course, he's been under pressure. His leadership has been under pressure. We've had, of course, reports of at least one minister who has perhaps considered challenging for the leadership. So we keep all that in mind as we watch these live pictures coming to us from the Houses of Parliament over in Westminster. And as I say, some there as surprised as we were to see these lines from the OBR dropping a little earlier than expected. So, as we go through the usual procedure, the usual proceedings with Rachel Reeves, the Chancellor, delivering her budget speech, how do you want to follow along? Well, watch here on Bloomberg TV. You might also want to call up the T Live blog. So, terminal users can follow all the latest news and analysis. If you use the function TLIV Go, you'll get that there. We're also streaming this live coverage of Bloomberg TV on our YouTube channel as well, so you can watch it there. We will, the usual procedure is at around 12:30 local time, so in around 8 minutes' time, we get to the Chancellor, she takes to the dispatch box, and we hear all about the OBR's forecasts first, and then we get all the policy responses, and they drip through one by one. As I say, things are about face today. Things are not happening in the usual order. The OBR's report, accidentally leaked by the OBR, it seems, to, and then into the markets, essentially, and so the market's having to react to the OBR's statement ahead of the budget being delivered. Let's bring you the thoughts of Lizzy Burden, who is down in Westminster for us. And Lizzy, we thought we were going to catch up with sort of in the dark ahead of the budget. Well, we do know some things about it, don't we? We now know that she has managed to find the headroom. The bond markets seem to like that. We know how she's found the headroom, and the bond markets didn't necessarily like that. So what stands out to you?
Yeah, look, it's a fitting end to weeks and weeks of leaks, Anna, that the OBR should front-run the budget like this. A fat finger moment, perhaps, stealing the Chancellor's sandwiches. This is not how things are supposed to play out on budget day. And as you say, the OBR apologising for this. They're going to do an investigation. They say it isn't going to happen again. But they've given away the big headlines here. The big one is headroom. The market really wanted to know how much headroom the Chancellor was going to have against her main fiscal rules tool. The expectation was for £15 billion. Now we know it's going to be £22 billion. I know you were speaking to Rupert Harrison, former economic advisor to Conservative Chancellor George Osborne. He had pointed out, hadn't he, that it would be nice if she could double her previous amount of headroom. It was £9.9 billion the last couple of times, now £22 billion. The other big thing for the market here, of course, is the forecasts. So they've revised up the inflation forecast from 2.1% in 2026 from 2.5% to 2.5%, from 2.1%. And then growth has been revised up for this year, but down for 2026. They've cut the productivity forecast by 0.3 percentage points to 1%. And we've got some flavours of the measures that are going to be in this budget as well, Anna. So you've mentioned a few of them, but just to reiterate, she's going to tax homes worth more than £2 million, the mansion tax, as was expected. She's going to reform gambling duties. Overall, she's going to raise taxes by £26.1 billion by the end of the decade. So we've seen markets whipsawing off the back of this. If I just take a look at the yield moves off the back of this, you've got the 30-year gilt yield up 4 basis points. The 10's up 2 basis points, the 2-year up as well. But let's see if this changes when Rachel Reeves takes to the podium in Parliament.
Yes, absolutely. And both of these, we've heard from the Prime Minister, Lizzy, and Rachel Reeves, of course, we're waiting to hear from her. I suppose both of them politically under pressure, putting aside the OBR mess, and maybe we can do that. Maybe this is entirely down to the OBR. But both of them have been under some political pressure, certainly the Prime Minister in the most recent example, Lizzy.
Absolutely. So you've got the Chancellor and the Prime Minister, frankly, caught between the bond vigilantes and the left wing of the Labour Party. And it had appeared that Reeves was going to appease the bond market with this budget. She'd laid the pitch for raising income tax and breaking the Labour manifesto, only to U-turn on that just about a week later, after there was all of our reports about a leadership challenge potentially from the Health Secretary, Wes Streeting, and reports that she'd been given a bit more headroom, and so U-turning on that to deliver reports of a smorgasbord of tax rises, and that seems to be what we're seeing here. Gambling, mansion tax, for example, but it's a U-turn, and it means that she seemed to have been picking the party over the markets, but perhaps being able to do that because of the forecasts working out so that she had the fiscal space to do it. It still leaves her under immense pressure, Anna, politically. This budget, the big test of Rachel Reeves' career so far.
Absolutely. And interesting to see the FTSE 250 losing ground. I was looking for that a moment ago when talking about the impact of increasing taxes on dividends. Didn't see it initially, but now it does seem to be retreating a little bit, doesn't it, that the FTSE 250. Lizzy, thank you very much. Bloomberg's Lizzy Burden for us in Westminster. Let's bring in Dan Hansen from Bloomberg Economics, who's joined me on set. Dan, good afternoon. No doubt scrambling to get your head around all of these news lines coming completely in the wrong order. We were expecting, as is usual, to hear first, of course, from Rachel Reeves with all the details. Instead, we get these numbers through from the OBR. I mean, where do we start? Do we start with the one that came first, which is headroom? So the headroom is more than had been expected. So that's a sort of fiscal sustainability tick, is it?
Yeah, definitely. I mean, taking at face value, £22 billion instead of £9.9 billion, as you say, big tick. We thought they would try and double it. They have tried to they have doubled it. Why have they been able to double it without at least appearing to raise taxes quite as much as people thought? I think we're going, the numbers here are £26 billion worth of tax rises. The reason for that is that the OBR actually handed the Chancellor a slightly better forecast before taking into account policy measures. So the fiscal deterioration, the fiscal slippage, the thing that we've all been trying to guess over the past, well, it feels like 6 months, maybe even longer, that slippage was smaller. So it basically meant that she didn't have to raise taxes by as much.
Because pay growth was stronger than we'd expected. Was that the thing? Exactly
that. So you've had the productivity downgrade. We had that. That's what everyone expected. But if you couple that with stronger inflation, what matters for the public finances isn't real GDP, which is the thing we talk about when we talk about growth, but it's actually nominal GDP. So it's the combination of real growth
Yep.
and prices. And so
Yes.
lifting the prices forecast through higher wage growth, higher domestically generated inflation, gets you to a place where the fiscal deterioration wasn't quite as significant.
And on days like today, we'll write a lot about and talk a lot about measures that maybe don't actually raise much money, but there are some that do raise a lot of money. And I'm thinking here about freezing, fiscal drag, basically. So the UK extending the freeze on income tax thresholds until 2030, 2031.
Yeah.
That's 5 years. I mean, that's going to catch a lot more people, isn't it? A lot more people are going to be higher rate taxpayers within that 5-year period if wages continue to rise at the rate that they're doing.
Yeah, absolutely. And that is the big revenue-raising measure. They obviously have decided against anything on income tax rate rises in the near term. We heard about that.
It's so crazy, the conversation in this country, isn't it, that, you know, that will catch a lot of people with higher tax.
Absolutely.
But in politics, they won't talk about that as breaking the manifesto pledge because they haven't changed the rate.
No, the thing that I've picked up here, and the thing that Labour MPs are going to be knocking on doors and saying, is that this policy package takes 0.4 percentage points off inflation next year. And that's through what they're doing with energy bills, freezing fuel duty, and that is the number the market was looking for on the near-term CPI impact. And that's going to be the story that's told around this budget. It's not going to be the fact that the actual pain, the fiscal consolidation is taking place at the back end of the economic forecast, or back end of the forecast. That, I think, is why you've seen gilts whipsaw a little bit, because you say £22 billion worth of headroom, thumbs up, but where's it all coming? It's coming basically around the time of the next election, or at least when the next election is scheduled. So that is quite a difficult, in terms of credibility, that's very difficult. But from a political standpoint, selling the budget, it's all going to be about that point on CPI inflation.
So remind us, just because these numbers are coming out, you know, bit by bit. So it seems that they have managed to bringing down inflation mechanically by removing some of the extra bills that were on electricity bills. Is that what they're doing?
Yeah, that's exactly. From my reading of my scanning of the 200-odd page document, that is what that is what I've taken from it. Is that they, as I think it was trailed yesterday, that they were either going to reduce VAT on energy bills or they were going to reduce the levies on energy bills. I think, and I'll have to double-check this, but I think they've gone for levies.
Yeah.
That, combined with the fuel duty freeze, has a pretty substantial impact on CPI inflation. There's a nice chart in the Economic and Fiscal Outlook that shows it.
Yeah.
So it lowers, even though they have raised their inflation forecast, they haven't raised it as much as they otherwise would because of what Rachel Reeves has done.
And that will make it easier for the Bank of England to cut rates. That also part of why we saw 10-year yields drop then.
Possibly. I mean, whether people have got to that number or not, I've been
page
sort of
100 and whatever.
Page 90, whatever it is. But the point there is that lower observed inflation feeds through to inflation expectations. We know households are really sensitive to what goes on with energy prices. So the whole aim here is to make it less likely that inflation impacts inflation expectations, observed inflation impacts inflation expectations, and that at the margin makes it a little bit easier to cut interest rates.
We're just showing live pictures of the House of Commons, Dan, and I think Mel Stride was just asking there, saying it was utterly outrageous what's happened with this leak from the OBR. I mean, this is pretty... Is it unprecedented? That very overused word in financial markets, but we're not used to scrambling quite this much before a budget to work out what's happening.
Having worked there, the OBR is a very sort of secretive organisation that tries to do things as much as possible by the book. This is unprecedented. I mean, that we can say that for sure. So it is a big shock, and we're all just adjusting to the news. But I think the 3 points are inflation lower in the near term, headroom higher. But there is a question about the credibility of that, how that headroom has been built.
Yes.
Because everything has been backloaded. The difficult decisions have been delayed.
Difficult decisions are delayed. Well, that's a theme we often revisit on budget days, isn't it? In terms of some of the growth numbers then, I mean, we've talked about this a little bit, but the UK official growth forecast cut to 1.4% from 1.9% for 2026. This is a government that wants to deliver on growth. They said this at the time of the election, and they've been trying to find policies that will do that. We'll see what the full suite of policies looks like, I suppose, before we get a real handle on that. But it doesn't seem as if it's doing that in the short term, does it? No,
I mean, a lot of this downgrade is about the OBR's over-optimism about the path of the economy in the medium term. So it's not really about what this government is or isn't doing. It's about the OBR putting out a forecast that it believes is more just as likely to be wrong to the upside as it is to the downside. So a central forecast. So, you know, maybe one day further down the line we get a fiscal forecast where there's actually good news baked in, and we're not talking about fiscal holes, we're talking about something more positive. But this is about the OBR adjusting for that over-optimism. Yeah. So I don't think it's a read. I don't think it's a read on this government, and nor do I think it's a read on the previous government, even though that's what both sides will tell you in the House of Commons now. It's about the OBR adjusting for this optimism, particularly in its productivity forecast.
So we had that statement from, well, that question statement from the UK Shadow Chancellor, Mel Stride, saying it was utterly outrageous that we'd had this leak from the Office for Budget Responsibility. Dan, you describing it as very secretive, maybe not quite secretive enough today. But we were also then listening now to a short statement from Madam Deputy Speaker. So we'll keep across developments there. Obviously, we're waiting for the Chancellor, Rachel Reeves, to come to speak to us, and we'll be watching for developments there. I mean, in terms of the bond market reaction, then we have seen things settle down a little bit. What we don't have yet is DMO. Normally we get the OBR and the DMO after she's spoken, but we don't have the DMO, so we don't know what any of these changes are going to mean for bond issuance. I was speaking to people today, though, who were saying that wasn't necessarily likely to be a scare point for the markets, because actually the calendar of issuance looks a bit light, and I'm told the Chancellor is speaking. Let's listen in.
Chancellor. Madam Deputy Speaker, it is my understanding that the Office of Budget Responsibility's Economic and Financial Outlook was released on their website before this statement. This is deeply disappointing and a serious error on their part. The Office for Budget Responsibility have already made a statement taking full responsibility for their breach. Madam Deputy Speaker, we are rebuilding our economy. Over the last 16 months, we have overhauled our planning system to get Britain building, forged new trade deals with the United States, India and the European Union, reformed our visa system to bring the brightest and the best to Britain. We changed our fiscal rules that we inherited from the Conservatives and raised public investment to its highest level in 4 decades. And in last year's budget, I raised taxes on business and the wealthiest to close the £22 billion black hole in the public finances left by the party opposites. And we used that money to fund the biggest ever settlement for our National Health Service. They were the fair and necessary choices, and we faced opposition to them, from opponents to planning reform, who will always demand that the future is built somewhere else, not in their backyard. Opponents to trade, who want to take us down the path of isolation and division. Opponents to investment, who believe that the only good thing a government can do is get out of the way. Opponents who insist that the only way to balance the books is to cut public spending. And opponents who say that we don't need to balance the books at all. But we made these choices for a reason. Because after 14 years of Conservative government, working people demanded and deserved change. Investment, not cuts to our public services. Stability for our public finances. The single most important factor in getting the cost of living down. And economic growth, the best means to improve wages, create jobs and support public services. That is what our plan, that is what this government and our Prime Minister are all about. Today's budget builds on the choices that we have made since July last year. To cut NHS waiting lists, to cut the cost of living, and to cut debt and borrowing. No doubt we will face opposition again, but I have yet to see a credible or a fairer alternative plan for working people. These are my choices, the right choices for a fairer, a stronger and more secure Britain.
Order.
too much noise, and I expected so much better from you, Dr. Luke Evans. You're meant to be a leader in your community. Simmer down, Chancellor.
I'm happy for them to shout as much as they like, Madam Deputy Speaker, as long as they do it from the opposition benches where they can't cause any more damage. I said there would be no return to austerity, and I meant it. This budget will maintain investment in our economy and in our National Health Service. I said I would cut the cost of living, and I meant it. This budget will bring down inflation and provide immediate relief for families. I said I would cut debt and borrowing, and I meant it. Because of this budget, borrowing will fall as a share of GDP in every year of this forecast. Our net financial debt will be lower at the end of the forecast than it is today, and I will more than double the headroom against our stability rule to £21.7 billion, meeting our stability rule and meeting it a year early. These are my choices, not austerity, not borrowing, not turning a blind eye to unfairness. My choices are a budget for fair taxes, strong public services and a stable economy. That is the Labour choice. Growth is the engine that carries every one of our ambitions forward, through stability, investment and reform. The platform from which British ambition can finally get moving again. Because growth doesn't just appear out of thin air. It is built patiently and stubbornly by people who take risks, by founders who bet their savings on an idea, by firms breaking into new markets, developing new technologies and creating new jobs and new opportunities, by the men and the women who work hard every day in all parts of our country. Our job is not to watch from the sidelines, but to partner with them, backing them every step of the way, to match private enterprise with public ambition. I would like to thank my team of officials at the Treasury for their hard work in preparing this budget. In the spring, the Office of Budget Responsibility forecast that our economy would grow by 1% this year. I said then that Britain would defy the forecasts, and defy them we have. The OBR have upgraded Britain's growth for this year from 1% to 1.5%, reaching the same conclusions as the IMF, the OECD and the Bank of England, who have already upgraded their forecasts. Today, the OBR have published the result of their review of the supply side of the economy. They are clear that this is not about the last 14 months. It is about the previous 14 years. The legacy of Brexit and the pandemic, and the damaging decisions by the party opposite. Cutting public spending, leaving communities and entire regions behind, starving our economy of investment and weakening our public services. As a result of their review, the OBR are reducing their expectations for productivity growth by 0.3 percentage points to 1% by the end of the forecast. They say today, and I quote, "Real GDP is forecast to grow by 1.5% on average over the forecast due to lower underlying productivity growth. There is an impact on our public finances too. The OBR say that their productivity forecast will mean £16 billion less in tax receipts by 2030. These forecasts are the Tories' legacy, not Britain's destiny.
Order. It is very hard to hear the Chancellor over all the shouting. And Mr. Holmes, you promised me yesterday you were going to be on top behaviour in the first few minutes. Chancellor.
We beat the forecasts this year and we will beat them again. By boosting trade, not blocking it, by increasing investment, not cutting it, by championing innovation, not stifling it, by backing working people, not making them poorer. Brick by brick, we've been building our economy, building roads, building homes, getting spades in the ground and cranes in the sky. Growth begins with the spark of an entrepreneur. Half of new jobs in Britain are created by scale-up businesses, and we want those jobs created here, not somewhere else. Our job is to make Britain the best place in the world to start up, to scale up and to stay. So we're widening eligibility for our enterprise incentives, so scale-ups can attract the talent and the capital that they need. Expanding the enterprise management incentive so more companies can offer tax-relieved share options. Re-engineering our enterprise investment and venture capital trust schemes so they don't just back early-stage ideas, but stay with companies as they grow. Introducing UK listings relief, a 3-year exemption from stamp duty reserve tax for companies who choose to list here in Britain. And to continue this work, I am launching a call for evidence on how our tax system can better back entrepreneurs and a targeted review with founders and investors at the heart to make the UK an even more attractive place to grow your business. We are sending a simple message to the world. If you build here, Britain will back you. And our retail investment system should do the same. The UK has some of the lowest levels of retail investment in the G7. And that is not only bad for business, who need that investment to grow, it's bad for savers too. Someone who has invested £1,000 a year in an average stocks and shares ISA every year since 1999 would be £50,000 better off today if they'd put that same money into if they'd put the same money into a cash ISA. And so from April 2027, I will reform our ISA system, keeping the full £20,000 allowance while designating 8,000 of it exclusively for investment, with over 65s retaining the full cash allowance. And thanks to our changes to financial advice and guidance, banks will be able to guide savers to better choices for their hard-earned money. Over 50% of the ISA market, including Hargreaves Lansdown, HSBC, Lloyds, Vanguard and Barclays, have signed up to launch new online hubs to help people invest here in Britain. At this budget, consistent with the commitments in our corporate tax roadmap, I will retain our competitive corporation tax rate, the lowest in the G7, and retain our generous full expensing offer for business investments. I will also introduce a new 40% first-year allowance so that businesses can write off more of the cost of their investment up front, while reducing main rate writing down allowances in line with fiscal constraints. Private investment is the lifeblood of economic growth, but growth needs public investment too. When faced with challenges, previous chancellors have chosen to decrease, delay or cancel capital spending. But low investment is the cause of our productivity problem, not the solution. So my choice is not cuts, not stagnation, but to maintain the additional £120 billion of investment that I provided at the spending review. In transport, to link our towns and our cities, energy infrastructure to power our businesses, and housing, so people can live near good jobs, paying decent wages and growing businesses. That is the Labour choice. I'm grateful to the Financial Secretary to the Treasury for his work in driving our growth agenda forward. As we allocate investment for the infrastructure that is the backbone of economic growth across our country, today I will commit investment for the Lower Thames Crossing. And we're continuing to drive investment in city-region transport, in the Midlands Rail Hub and the Transpennine Route upgrade, along with our commitments to the Northern Growth Corridor, including Northern Powerhouse Rail. It is this Labour government that has overhauled our planning system, and I will today provide further funding to increase planning capacity through a new skills offer, as called for by the British Chamber of Commerce and the Confederation of British Industry. It is this Labour government that has invested in nuclear power, in Sizewell C and in Culham. We are taking forward our commitment to slash electricity prices for thousands of manufacturing businesses, as Make UK and many others have called for. And today I'm pleased to welcome John Finkelton's report, an ambitious plan to cut the red tape that has tied our nuclear industry in knots for decades. And within 3 months, we will set out our plan for delivering his recommendations. We are proud of our industrial heritage, and we are determined to build the industry of the future so that we buy, make and sell more here in Britain. That's why, as we increase defence spending, we are investing in Portsmouth, in Barrow and in Plymouth. And I'm pleased to be supporting Team Derby, an initiative to drive growth in one of our defence industry hubs. It's why we stepped in to save British Steel in Scunthorpe and invested in Sheffield Forgemasters. And it's why we've changed government procurement so we can buy British when it is crucial to our national security. For steel, for shipbuilding, and today for AI, driving innovation and building that great industry here in Britain. But it's not just what we invest that matters, it's how we invest. Putting money and power back in the hands of local and regional leaders. Today, we are devolving £13 billion of flexible funding for 7 mayors to invest in skills, business support and infrastructure. I'm extending the business rates retention pilots in the West of England, Liverpool City region and Cornwall until 2029. I'm providing £30 million for the Kernow Industrial Growth Fund for sectors like critical minerals and marine innovation. I am establishing the Leeds City Fund, a long-term agreement to retain business rates to fund local regeneration projects like the development of Leeds South Bank, and I am allocating £20 million for the new Peterborough Sports Quarter and £16 million for a science centre in Darlington from the Growth Mission Fund. The benefits of investment the benefits of investment and growth must be built and felt in every part of our United Kingdom. So we are providing an additional £370 million for the Northern Ireland Executive, £505 million for the Welsh Government and £820 million for the Scottish Government over the spending review period through the Barnett formula. And I am making... Sorry, I didn't quite catch that from the SNP. Did they not? Perhaps, Madam Deputy Speaker, they didn't hear. £820 million for the Scottish Government over the spending review period because Anna Sawa asked us to. And I'm making targeted investments in our industrial strategy sectors across the UK. In Northern Ireland, I am providing £17 million to support businesses and strengthen the UK internal market, and backing advanced manufacturing through the Northern Ireland Enhanced Investment Zone. Wales will be the host for 2 AI growth zones, creating more than 8,000 jobs, supported by a £10 million investment in the semiconductors critical for that industry. And we are building the UK's first small modular nuclear reactors with Rolls-Royce at Wilfer in Anglesey. 2 Labour governments working together in Wales to deliver for the people of Wales. And in Scotland, I'm committing over £14 million for low-carbon technologies in Grangemouth, £20 million to renew infrastructure at Inchgreen in Inverclyde, and £20 million to redevelop Kirkcaldy Town Centre and Seafront, with construction starting next year. And that's on top of the UK's biggest ever warship export deal with the Norwegian government to build frigates in Glasgow. supporting 4,000 jobs. Investment opposed by the SNP, jobs opposed by the SNP, defence opposed by the SNP, but secured by this Labour government. A growing economy needs strong foundations of economic stability, with borrowing, inflation down and investment up. That is good for business, and it is good for working people, so they have more money in their pockets. Economic stability, safeguarded by ironclad fiscal rules, is our best defence against rising prices and the best way to improve living standards. We've all seen the alternative. 3 years ago, in their clamour to cut taxes for the richest, the Tories under Liz Truss crashed the economy and sent mortgage rates spiralling and brought pensions to the brink. They've been so loud, Madam Deputy Speaker, and yet I can't even hear them now. Now, I know that the leader of the Green Party is a keen hypnotherapist, and he believes that he can achieve remarkable things using only the power of his mind. Unfortunately, the only things getting bigger under his approach would be the deficit and the rate of inflation. And for all the damage that the Conservative cuts did to our schools and our hospitals, they also doubled the national debt. Our net financial debt this year will be £2.6 trillion, 83% of GDP, meaning that today, 1 in every £10 that government spends is on debt interest. Not on paying down that debt, but just on paying the interest on the debt that we inherited from the Conservatives. My fiscal rules will get borrowing down while supporting investment. The stability rule, that day-to-day expenditure must be met through tax receipts. And the investment rule, which allows me to increase investment whilst getting debt on a downward path. Those fiscal rules are non-negotiable. I met them at the budget last year, I met them in the spring, and I have met them today. While the current budget balance is in deficit by £28.8 billion in 26-27 and £4.6 billion in 27-28, it moves into a surplus of £3.9 billion in 28-29, £21.7 billion in 29-30 and £24.6 billion in 2030-31, more than doubling our headroom against the stability rule and meeting that rule a year early too. And our net financial debt is 83.3% in 26-27, 83.6% in 27-28, 83.7% in 28-29, falling to 83.0% in 29-30 and 82.2% in 2030-31. Madam Deputy Speaker, I said we would cut the debt, and we are, with debt down by the end of the forecast. And going forwards, to support our commitment to a single fiscal event and further strengthen our economic stability, I will follow the recommendations of the International Monetary Fund by assessing the fiscal rules just once a year at the budget. Despite the challenges we face on productivity, the path of our deficit reduction remains broadly the same as in spring. Public sector net borrowing is due to be £112.1 billion, or 3.5% of GDP in 26-27, 3% in 27-28, 2.6% in 28-29, 1.9% in 29-30 and 1.9% in 2030-31, ending at £67.2 billion, translating into an increase in the net cash requirement next year of £4.2 billion, taking the total to £133.3 billion. According to the IMF, we are due to reduce borrowing more over the rest of this Parliament than any other G7 economy. The Conservatives crashed the economy, we are protecting it. The Conservatives lost control of debt, we are getting debt down. The Conservatives let inflation and interest rates go through the roof. But, Madam Deputy Speaker, since Labour took office, the Bank of England have cut interest rates 5 times. I've made my choices. Not reckless borrowing, not dangerous cuts, but stability for our economy, security for our public finances, and security for family finances too. Those are the Labour choices. Madam Deputy Speaker, Tory austerity left classrooms crumbling and waiting lists sky high, weakened our productivity and choked our economic growth. And now they propose a further £47 billion of cuts to our public services. Well, that is equivalent to cutting every police officer in our country twice over. And then there is Reform, who promise more than £100 billion of cuts, with no details of where those cuts will come from or who will pay for them. A recipe for devastating damage to our public services. People voted for Labour because they wanted roads that aren't full of potholes. They want police on our streets, and they want an NHS that is there when they need it. And we're delivering that. Waiting lists down by 230,000. And not just the 2 million additional appointments we promised, but an additional 5.2 million appointments already delivered since the general election. I joined the Labour Party almost 30 years ago because I could see that the Conservative government that I grew up under didn't care much about schools like mine. Textbooks were rationed. I know that many of you weren't at schools like mine.
There is far too much noise, far too much excitement. People need to calm down a little. Chancellor.
They don't want to hear what the Tories did to schools like mine, but I will tell them. Textbooks rationed, libraries closed, kids herded into porter cabins in the playground, and I came into politics to change that. The money that I allocated at the spending review will fix the crumbling classrooms that the Conservatives left behind and build the schools that they promised but never delivered. And today, thanks to representations from my honourable friends, the members for Wolverhampton North East and Leeds South West and Morley, I will provide £5 million for libraries in secondary schools, building on the £10 million commitment to ensure that every primary school has a school library within this Parliament. And thanks to representations from my honourable friends, the members for Bournemouth East and from Luton North, I am providing £18 million to improve and upgrade playgrounds across England. Madam Deputy Speaker, let there be no doubt that this is a government that is on the side of our kids and who will back their potential. I will not allow the legacies of Conservative neglect to stain our society. Last year, I made changes to the Mine Workers Pension Scheme to ensure that its members receive the fair pensions that they are owed. This year, with thanks to the Minister for Pensions for all his work in this subject, I can go further. I have heard representations from Labour Coalfield MPs, including my honourable friends, the members for Bassetlaw, Blyth and Ashington, Barnsley South, Mansfield and Llanelli. And today I can announce that I will transfer the Investment Reserve Fund of the British Coal Staff Superannuation Scheme to its members. The men and the women who worked in our coal industry get a fair deal in their retirement too. And more. Having heard representations from my honourable friends, the members for Banbury and the member for Edinburgh South West, I will index for inflation on pensions accrued before 1997 in the Pension Protection Fund and the Financial Assurance Scheme, so that people whose pension schemes became insolvent, no fault of their own, no longer lose out as the result of inflation. Last year, I also provided funding to compensate the victims of the infected blood scandal, after the previous government failed to budget for the costs of compensation. This year, I have listened to representations from my honourable friend, the member for Eltham and Chislehurst, and my honourable friend, the member for Edinburgh South West. And I'd like to thank the Minister for Employment for her representations over many years on this subject. As a result, I will exempt all payments from the infected blood scheme from inheritance tax, regardless of the circumstances in which those payments are passed down. Madam Deputy Speaker, that is how we should be spending taxpayers' money, on dealing with injustices and building strong public services, not on waste and inefficiency. At the spending review, I set an ambitious target of £14 billion of efficiencies per year by 2029, and I am grateful to the Chief Secretary to the Treasury for driving that work forward, realising savings through AI and automation, and by scrapping NHS England and reducing back-office staff by 18,000. At this budget, I will find a further £4.9 billion of efficiencies by 2031. Getting rid of police and crime commissioners, cutting the cost of politics and local government, and selling government assets that we no longer have any use for. These savings will be required across government, but for our National Health Service, I will reinvest all of these savings back into the care that people rely on. More nurses, more GPs, more appointments. Restoring the services that faltered under years of Conservative decline, and investing in the future of our National Health Service. And today I am announcing £300 million of investment in technology to improve patient service, and 250 new neighbourhood health centres. Expanding more services into communities so that people can receive treatment outside of hospitals and get better, faster care where they live. Over 100 of these will be delivered by 2030, including in Birmingham, Truro and Southall. The Labour Party founded our National Health Service, and we will renew our National Health Service. I will take the same approach for defence spending that I take to NHS spending, reinvesting savings back into our national security. In our age of insecurity, Britain will continue to stand with our allies, working in collaboration to secure a sustainable ceasefire for Ukraine, and maintaining our commitment to NATO, with the UK set to spend 2.6% of GDP on defence by April 2027. Madam Deputy Speaker, the public rightly expects that we stamp out fraud, error and waste, and put that money to good use in our schools and our hospitals and other frontline services. My right honourable friend, the Home Secretary, has already announced that she will claw back excess profits from the use of hotels to house asylum seekers, as we phase out the use of those hotels entirely. And we will consult on reforms to indefinite leave to remain and access to taxpayer-funded benefits. The introduction of digital ID will break the link between illegal migration and illegal working. And the HMRC and the Fair Work Agency will crack down on illicit businesses that blight our high streets and undercut illegitimate firms, enforcing the minimum wage, investigating dodgy businesses, and increasing scrutiny of the gig economy, as well as tracking down fraudulent business owners who vanish without paying their taxes. And I'd like to thank my honourable friends, the members for Great Grimsby and Cleethorpes, Lee and Atherton, and Kensington and Bayswater for their representations on this subject. And I'll take further steps to prevent and track down unpaid tax, which will together, these reforms will raise nearly £10 billion a year by 2030, including through new powers for HMRC to pursue the promoters of tax avoidance schemes. I am building on our successful use of targeted checks on welfare claims to root out fraud and error and prevent public money being paid to people who are not entitled to it. And I would like to thank Tom Hayhoe, the COVID Corruption Commissioner, for his work in helping to chase down nearly £400 million from dodgy pandemic spending and contracts. contracts handed out by Tory ministers to Tory peers and Tory friends. Well, that money belongs in our schools and in our hospitals.
It is so noisy now, we can barely hear the Chancellor. Everybody needs to calm down. Chancellor.
Well, I wouldn't want any honourable member to miss this. So we are chasing down that money, and we've got almost £400 million back from dodgy pandemic spending and contracts. Tory contracts handed out by Tory ministers to Tory peers and Tory donors. Well, that money belongs in our schools and in our hospitals, and we are getting that money back. And finally, Madam Deputy Speaker, we are ramping up sanctions on Russia, and we are freezing known Russian assets. But let me be clear, I don't actually mean the honourable member for Clacton. Under the Conservatives...
Order. You don't need commentary from the backbenches, and Mr. Dewhurst, you are so loud. It's remarkable how far your voice carries. Chancellor.
Under the Conservatives, the cost of our welfare system increased by nearly 1 percentage point of GDP, equivalent to £88 billion in just 5 years. The broken welfare system that we inherited wrote off millions of people as too sick to work. And we will reform that system so that it is a system that does not count the cost of failure, but one that protects people who cannot work and empowers those who can. We have brought back face-to-face assessments for disability benefits. Those are the face-to-face assessments that the Shadow Chancellor got rid of when he was Work and Pension Secretary. And our changes to universal credit will get 15,000 people back into work, a figure confirmed today. The former Health Secretary, Alan Milburn, will review the causes of rising youth inactivity, and we are already taking action. I'm grateful to the Federation of Small Businesses and Small Business Britain for their representations on apprenticeships. And today I am announcing funding to make the training for under 25 apprenticeships completely free for small and medium-sized enterprises. And funding our new youth guarantee, providing £820 million over the next 3 years to give young people who are let down by the Conservatives the support and the opportunity that they deserve. Guaranteeing every young person a place in college, an apprenticeship or personalised job support. And after 18 months, 18 to 21-year-olds will be offered paid work, not benefits. The Motability Scheme was set up to protect the most vulnerable, not to subsidise the lease on a Mercedes-Benz. And so I am making reforms that will reduce generous taxpayer subsidies, and Motability have confirmed that they will remove luxury vehicles from their scheme, getting the scheme back to its original purpose of offering cost-effective leases to disabled people. And taxpayers' money should not be spent on pensions for people abroad, who only lived here for a couple of years and may never even have paid a penny in tax. The Conservatives allowed thousands of people living abroad to buy their way into the state pension for as little as £3.50 a week, debasing the purpose of our pension system. And so I will abolish access to Class 2 voluntary national insurance contributions for people living abroad, increasing the time that someone has to live or work in Britain to 10 years and increasing the contributions that they must pay. These reforms improve our welfare system. They support our young people, protect those who need it most, and put an end to Conservative waste and unfairness. Madam Deputy Speaker, to break the cycle of austerity, we need a fair and a sustainable tax system, one that generates revenues to fund the public services that we all use, and supports investment to grow our economy. That does mean that today I am asking everyone to make a contribution. previous Conservative government froze personal tax thresholds from 2021 to 2028. And today I will maintain all income tax and equivalent national insurance thresholds at their current level for a further 3 years from 2028. While ensuring that people...
The noise is far too high. Chancellor.
The Right Honourable Lady supported these freezes when her party made them. She might want to forget about it, but the British people never will. At the same time, we are ensuring that people only in receipt of the basic or new state pension do not have to pay small amounts of tax through simple assessment from April 2027. I will also keep the Plan 2 student loan repayments threshold at its 2026-27 level for 3 years. Madam Deputy Speaker, I know that maintaining these thresholds is a decision that will affect working people. I said that last year, and I won't pretend otherwise now. Madam Deputy Speaker, I am asking everyone to make a contribution. But I can keep that contribution as low as possible because I will make further reforms to our tax system today to make it fairer and to ensure that the wealthiest contribute the most. The Conservatives knew that our tax system didn't work. Time and time again, they ducked the necessary reforms, leaving a system unfit for a changing economy, with unfairness that they refused to address. Currently, a landlord with an income of £25,000 will pay nearly £1,200 less in tax than their tenants with the same salary, because no national insurance is charged on property, dividend or savings income. It's not fair that the tax system treats different types of income so differently. And so I will increase the basic and higher rate of tax on property, savings and dividend income by 2 percentage points, and the additional rate of tax on property and savings income by 2 percentage points. Even after these reforms, 90% of taxpayers will still pay no tax at all on their savings. As well as narrowing the gap between the tax on income from assets and income from work, I also believe that a fair society is one where the wealthiest pay their fair share. The reforms I made last year will raise an additional £8 billion a year by 2020-30 from wealth. I increased taxes last year on private equity, private schools and private jets. I abolished the non-dom tax regime. And this year, I will make 2 changes to cap trust charges and prevent avoidance. I reformed inheritance tax on agricultural and business assets. And this year, I am aligning those reforms with wider inheritance tax rules by allowing the transfer of the 100% relief allowance between spouses, balancing the taxation of these valuable assets with the realities of family life. In this budget, I will take further steps to deal with a long-standing source of wealth inequality in our country. A Band D home in Darlington or Blackpool pays just under £2,400 in council tax, nearly £300 more than a £10 million mansion in Mayfair. And so, from 2028, I am introducing the high-value council tax surcharge in England, an annual £2,500 charge for properties worth more than £2 million, rising to £7,500 for properties worth more than £5 million. This will be collected alongside council tax, levied on owners, and we will consult on options for support or deferral. This new surcharge will raise over £400 million by 2031 and will be charged on less than the top 1% of properties. Madam Deputy Speaker, reliefs in our tax system cost the taxpayer billions of pounds a year, but many of them no longer serve their original purpose. The government rightly provides generous tax relief for people paying into a pension, relieving income tax on all contributions and on the investment itself, as well as national insurance relief on employer contributions, at a cost of over £70 billion a year to the Exchequer. This budget makes no changes to those reliefs or to the tax-free lump sum. But salary sacrifice for pensions, which was intended to be a small part of our pension system, is forecast to almost treble in cost to other taxpayers, from £2.8 billion in 2017 to £8 billion by 2030, with the greatest benefit going to the highest earners, or to those in the financial services sector putting their bonuses into pensions tax-free, while those on the minimum wage or those whose employers don't offer salary sacrifice don't benefit at all. That is not sustainable for our public finances, putting pressure on the tax that everyone else pays. And so I am introducing a £2,000 cap on salary sacrifice into a pension, with contributions above that taxed in the same way as other employee pension contributions. That is a pragmatic step so that people, especially on low and middle incomes, can continue to use salary sacrifice for their pension without paying any more in tax than they do now, and to give individuals and employers time to adjust to these new arrangements. These changes will come into effect in 2029. The coalition government introduced 100% relief from capital gains tax on business sales made to employee ownership trusts, creating a route for gains to go completely untaxed when businesses are sold. I will reduce that relief to 50%, retaining a strong incentive for employee-owned companies. And as we work towards doubling the size of the cooperative economy, the Department for Business and Trade will launch a call for evidence on how we can better support co-ops to grow. Because of the changes that I have made to capital gains tax this year and last year, receipts are forecast to increase from £14 billion this year to £30 billion by 2030. To support our high streets, I am announcing a package of regulatory changes as called for by UK Hospitality and the British Retail Consortium. And I will support the Great British Pub through our new national licensing framework, encouraging councils to back our pubs and to back late-night venues with greater freedoms. For business rates, I will introduce permanently lower tax rates for over 750,000 retail, hospitality and leisure properties, the lowest rates since 1991, paid for through higher rates on properties worth more than £500,000, like the warehouses used by online giants. Alongside this, I will introduce a package of support worth over £4.3 billion over the next 3 years for a property of any size seeing a large increase in their bill. And to support a level playing field in retail, I will stop online firms from undercutting our high street businesses by ensuring customs duty applies on parcels of any value. I will reform our motoring taxes, exempting search and rescue vehicles from vehicle excise duty as called for by my honourable friends, the member for the Western Isles and for Whitehaven and Workington. And because all cars contribute to the wear and tear on our roads, I will ensure that drivers are taxed according to how much they drive and not just by the type of car they own, by introducing the electric vehicle excise duty on electric cars. This will be payable each year alongside vehicle excise duty at 3p per mile for electric cars and 1.5p for plug-in hybrids, helping us to double road maintenance funding in England over the course of this Parliament. And alongside this, I am providing support to boost our British car industry, increasing the threshold for the expensive car supplement on electric vehicles to £50,000, saving over 1 million motorists £440 a year. Providing £1.3 billion additional funding for the electric car grant, extending it to 2030 and taking total funding to £2 billion. as well as delaying changes to the employee car ownership scheme. In addition, we're investing a further £200 million to accelerate the rollout of EV charging, as well as 100% business rates relief for EV charge points for the next decade, with thanks to my honourable friend, the member for Camborne and Redruth, for his representations on this policy. And I will improve competition in our taxi industry by ending ride-hailing companies' use of a discount scheme intended for coach tours, as called for by Steve McNamara, the General Secretary of the Licensed Taxi Drivers Association, legislating to restrict access so that everyone pays fairly and protecting £700 million of tax revenue each year. I am responding to our consultation on landfill tax, and listening to representations, particularly from our house building industry. I will not converge towards a single rate, but I will prevent the gap between the two rates from widening to balance the need to address tax avoidance in the current structure. I will today publish Ray McCann's report into the loan charge along with the government's response, setting out a new settlement opportunity that will finally allow people to finalise their position and draw a line under this long-standing issue. And I'd like to thank my honourable friend, the member for Milton Keynes Central, for her representations on this subject. I will continue with the planned uprating for tobacco duties that I set out last year and uprate alcohol duties by inflation, along with our plans to introduce a vaping products duty in 2026 and changes to the soft drinks industry levy announced by my right honourable friend, the Health Secretary, yesterday. And I'd like to thank the Exchequer Secretary to the Treasury for his work on all the tax measures in this budget. I will also reform gambling taxes in response to the rise in online gambling. Remote gaming is associated with the highest levels of harm. And so I am increasing remote gaming duty from 21% to 40%. With duty on online betting increasing from 15% to 25%. I am making no change to the taxes on in-person gambling or on horse racing. And I am abolishing bingo duty entirely from April next year. Taken together, my reforms to gambling tax will raise over £1 billion per year by 2031. As a result of the tax reforms I have made today, I can confirm that I will not be increasing national insurance, the basic, higher or additional rates of income tax or VAT. And I have kept everyone's contribution as low as possible through reforms to make our tax system stronger, closing loopholes, ensuring that the wealthiest pay their share, and building a tax system that is fairer for the future as our economy changes. On the day I became Chancellor, I said that I would judge my time in office a success if I knew that ordinary children from working-class backgrounds were living more fulfilling lives. Their horizons expanded, their potential realised. I joined the Labour Party, I came into politics, because I believe that every child has equal worth and deserves an equal chance to achieve their promise. The biggest barrier to equal opportunity is child poverty. Because for every child that grows up in poverty, our society pays a triple cost. The first and the heaviest is to the child. Going to school hungry, waking up in a cold home, or in another B&B. While other children enjoy the advantages of parents with time to help with homework, the quiet space at home to work in, too many go without. And there is also the cost of supporting a family in poverty, which ends up in the lap of overstretched councils, who can do no more than shunt them into temporary accommodation at huge cost to local taxpayers. Then there is the future cost to our economy and to our society, of wasted talent and a welfare system that bears the cost of failure for decades to come. Young people with so much to contribute but whose potential is suffocated early by limited life chances and missed opportunities, struggling to make their way in a society that did not look out for them. I don't intend to preside over a status quo that punishes children for the circumstances of their birth and demands that we all pay 3 times over for it. Since last July, we've rolled out free breakfast clubs in schools. We're expanding free school meals to 500,000 more kids, lifting 100,000 children out of poverty as we do it. We've passed the Renters' Rights Act and we've extended the childcare offer. And I'm proud of all of that. But it's not enough. Because there is one policy that pushes kids into poverty more than any other. It was introduced by the party opposite. They said it would save money and that it would bring about behavioural change, disincentivising poorer families from having more children. Well, even on its own terms, it failed. The welfare bill has continued to rise, and there's been no difference in the size of families. But what it has done is to push hundreds of thousands of children into poverty since it was introduced. They said they were punishing parents' choices, but it's the kids who have paid the price. They've paid the price for the policies of a party which opted for cynical gimmicks over real savings in our welfare system. I understand that many families are finding times hard and that many kids have had to make difficult choices when it comes to having kids. And there are many reasons why people choose to have children and then find themselves in difficult times. The death of a partner, separation, ill health, a lost job. I don't believe that children should have to bear the brunt of that. And neither can I, in good conscience, leave in place the vile policy known as the rape clause, requiring women to prove if their child has been conceived non-consensually to receive support. I'm proud to be Britain's first female Chancellor of the Exchequer. I take the responsibilities that come with that seriously. I will not tolerate the grotesque indignity of women, of the rape clause, any longer. It is dehumanising, it is cruel, and I will remove it from the statute book. And so because I am tackling fraud and error in our welfare system, because I am cracking down on tax avoidance, because I am reforming gambling taxation, I can announce today, fully costed and fully funded, the removal of the 2-child limit in full from April. This side of the house. It's amazing what people get so angry about, and we've seen their true colours today. The thing they get angry about is lifting children out of poverty.
Order! Order. Our constituents will want to hear the Chancellor.
I think our constituents have heard all they need to from the party opposites today. We on this side of the House do not believe that the solution to a broken welfare system is to punish the most vulnerable. We are lifting 450,000 children out of poverty with the end of the 2-child limit. And, Madam Deputy Speaker, combined with other actions we are taking, this Labour government is achieving the biggest reduction in child poverty over a parliament since records began. That is the difference that this Labour government is making. Madam Deputy Speaker, I know how worried families are about the cost of everything. Worried that their money won't stretch to the end of the month. Worried that price... I think if you've got a house that's worth £5 million a year, you can probably afford it. But you get more exercise about reducing child poverty than you do about the richest paying more. Under this government, wages have risen, by more since we were elected than in 10 years under the last government. With lower interest rates already saving families £1,200 a year off a typical new mortgage, compared to that to when Liz Truss was Prime Minister. But I know that people still face pressure on their budgets day to day and week to week. And where there is more to do, where we can provide relief, we are doing it. Extending the bus fare cap, cracking down on rip-off price hikes, freezing prescription charges and freezing rail fares for the first time in 30 years. I am increasing the basic and new state pension by 4.8%, an increase of £440 per year for the basic state pension, and an increase of £575 per year for the new state pension, in line with our commitment to the triple lock. At the election, we promised a genuine living wage, and we are delivering it. At the budget last year, I increased the national minimum wage and the national living wage, and I am doing the same this year too. Accepting the recommendations of the Low Pay Commission in full, and increasing the minimum wage for 18 to 20-year-olds from £10 to £10.85 an hour, and increasing the living wage from £12.21 to £12.71 an hour. Under current plans, the temporary 5p cut to fuel duty that was introduced during the pandemic will come to an end in April, and fuel duty will be uprated in line with inflation. But I know that the cost of travelling to and from work is still too expensive. And so I am extending the 5p cut until September 2026. And because I know that changes in wholesale prices are not always passed on to motorists, I am bringing in new rules to mandate petrol forecourts to share real-time price rises through a new fuel finder, empowering drivers to find the cheapest fuel, calling out rip-offs and strengthening competition, saving the average household £40 a year. Madam Deputy Speaker, one of the greatest drivers of the rising cost of living is the cost of energy prices. The cause of high energy bills must be tackled at source, and so we are investing in energy security, in nuclear and renewable energy, and in insulation through our Warm Homes Plan. But that's not enough when people are struggling with energy bills today. The Conservatives' Eco Scheme was presented as a plan to tackle fuel poverty. It costs households £1.7 billion a year on their bills. And for 97% of families in fuel poverty, the scheme, get this, has cost them more than it's saved. It is a failed scheme, and so I am scrapping it, along with taking other legacy costs off bills. And as a result, I can tell you today that for every family, we are keeping our promise to get energy bills down and cut the cost of living. With £150 cut from the average household bill from April next year. Money off bills and in the pockets of working people. That is my choice. Not to neglect Britain's energy security like the Tories did. Not to leave working families to bear the brunt of high prices like the Tories did. But to get energy costs down now and in the future. That is the Labour choice. And Madam Deputy Speaker, one more thing. Because of our action on bills and on prices, as a direct result of this budget, the Office for Budget Responsibility confirmed today that inflation is coming down faster and will be a full 0.4 percentage points lower next year. That's the benefit of a Labour government cutting the cost of living. Madam Deputy Speaker, this Labour government is changing our country. In the face of challenges on our productivity, I will grow our economy through stability, investment and reform. I've met my fiscal rules and built our economic resilience for the future. I have asked everyone to contribute, yes, for the security of our country and the brightness of its future. But I have kept that contribution as low as possible by reforming our tax system, making it fairer and stronger for the future. I have protected our NHS, maintaining public investment and driving efficiency in government spending. I've taken action on our broken welfare system, rooting out waste and lifting children out of poverty. And I have cut the cost of living, with money off bills and prices frozen, all while keeping every single one of our manifesto commitments. Those are my choices.
Order. Mr. Rankin, Miss Moulton, your voice carries right across the chamber. Right across the chamber. Try and take a breath every so often. Chancellor.
Those are my choices. Not austerity, not reckless borrowing, but cutting the debt, cutting waiting lists and cutting the cost of living. Those are Labour choices, promised and delivered by this budget, promised and delivered by this Labour government. And, Madam Deputy Speaker, I commend this statement to the House.
Standing Order number 51, the first motion entitled Provisional Collection of Taxes must be decided without debate. Will the Chancellor of the Exchequer please move formally? Chancellor, please move formally.
Formally.
The question is that pursuant to Section 5 of the Provisional Collection of Taxes Act 1968,
well, there we are. That's the budget. Things coming slightly in a different order today. We got the OBR, of course, their statement, and then we got the budget. But we seem to have all the pieces we usually have, just not exactly in the usual order. We are still waiting to hear from the DMO about what this means for gilt issuance. But in the meantime, let's see how gilt markets have been responding to this. This was dubbed as a budget that the Chancellor needed to land with her party and also land with the gilt markets. And we did see quite a lot of volatility on the early release of the OBR statement. We saw a drop in gilt yields, and then we saw those yields climbing. And then they've dropped again. So it doesn't seem as if we've moved a whole lot during that. A little bit lower, actually. The yields are a little bit lower than when we started. Let's have a look at the 10-year, and that shows you the profile of the day, as I've just been describing it, and see where the OBR data hit. And we saw that drop in yields. Perhaps on the headline around the threshold, the fact that the threshold has been increased and increased more than the market had been expecting. And now we get confirmation from the Chancellor that we will have fewer of these budgetary events, fewer chances to assess her against her fiscal rules. Let's have a look at some other assets, because we've seen a substantial movement in the pound and also in UK stocks. Some of the trading-related companies doing pretty well, and that's pushing up the FTSE 250. The pound also on the rise. Let me just tell you, we're getting numbers through from the DMO. The UK plans £303.7 billion of gilt sales this fiscal year. The estimate was £308 billion, so that is less than had been anticipated, and that does actually chime with what we've been hearing in conversations this morning, that actually the gilt issuance slate was pretty light going into the first quarter, and so perhaps this wasn't going to be an area of tension for the markets, and perhaps that remains the case. UK home builder stocks erasing their declines, turning positive. There was quite a bit in there about housing. Let's get a quick summary on the green in Westminster, in the cold. Lizzy Burden outside Westminster for us. She'll give us a quick takeaways, and then we'll get some analysis. Lizzy.
All right, Anna. Well, the good news here is that, as we learned prematurely from the Office for Budget Responsibility, the Chancellor has managed to double her headroom to £21.7 billion against her fiscal rules. By the way, she started her speech by saying that that was deeply disappointing from the OBR, a serious error that they released it early. I do wonder whether the OBR boss, Richard Hughes, is going to last in his post, because this was unprecedented and, as you say, market moving. But beyond that top headroom figure, beneath it, It was quite a lot of bad news, actually. So growth downgraded, the welfare bill still soaring, living standards expected to rise more slowly than expected, and she's raising the tax burden to 38% of GDP. That's the highest since records began just after World War II, and it's going to be, I'm sure, plastered across the front pages of the UK newspapers tomorrow. If we look beneath that at some of these individual measures, as expected, she's implementing a stealth tax, so freezing income tax thresholds for another few years. That's going to raise £12.7 billion by 2031. If you look at some of the commentary on X, Paul Johnson, the former director of the Institute for Fiscal Studies, says this is a fundamental change to the tax system structure. It's creating millions of new taxpayers and higher rate taxpayers. So Reeves says this is fair. Let's see how it plays out politically. Then, as trailed, she's lifted the two-child benefit cap. That'll cost £3 billion by the end of the decade. It'll appeal to the left of her party. How much pressure politically can it relieve, we will ask. But Anna, look, for the markets, what's crucial here is she says this is going to bring down inflation, and indeed, as you say, you had yields falling through the speech. The gamble, though, is whether the market will wear the backloading of this fiscal tightening. And as you say, markets were whipsawing throughout the speech. Are they truly convinced yet? We'll have to see.
Lizzy, thank you very much. Bloomberg's Lizzy Burden there on the green. Joining us now here in the studio, Head of Economics and Government, Stephanie Flanders, here at Bloomberg, and John Stepek, Editor of Bloomberg's Money Distilled newsletter. Thank you both for patiently waiting and for joining us today. Stephanie, let's come to you with your take. I mean, we've got increased headroom, so, you know, this should be something that perhaps reduces the frequency with which we have to worry about the state of public finances in the UK.
That and getting rid of the fiscal events, that will do it.
Yes, that'll do it.
She's reduced it by 50%. So in terms of those... But I think, I mean, and a lot of people think that is a sensible. We obviously have in Europe. It's quite a common thing to have only one budget a year, and I think we've learnt. Certainly, the Treasury has learnt the hard way over the last 6 months. This instability that comes from having these sort of. We can start talking about it very soon after they're given fiscal event. Look, on the basics, I think it was interesting that the markets. We'll see what happens over the next few days. And Lizzie's right to highlight that sometimes these things are a slow burn in terms of the market reaction, let alone the political reaction. But I think she's done just enough to reassure bond markets and by increasing that headroom. But the way she's done it, and in general the approach, the kind of ducking of some of the harder political choices, I think is a missed opportunity. And that was something that Dan Hansen, our chief UK economist, and others on his team have been highlighting over the last few months. You know, in a way, the UK had been punished unfairly, given the fundamentals, was actually paying higher yields in the market because of the uncertainty, the questions about, is this a government that's willing to do difficult things? And the answer that's coming out of this budget is sort of no.
Yes.
I mean, they've done enough to increase, to prepare for any, disasters or things going wrong. That's great. But they haven't actually persuaded the markets that things can go better because they're willing to take, crucially, some pain up front. And I think in retrospect, that will be a shame that they could have actually brought a lot of billions into the Treasury by just shaving. Remember, every 1 percentage point off the gilt yield is £17 billion less of debt service. So anything you can do to that would have made a difference, and she's missed that chance.
Yes, OK. And John, your big takeaway, I mean, I'm drawn to the fiscal drag story. We've talked about that a lot under the Conservatives for years. Now we're talking about it with Labour, and still the politics will ignore that. I mean, because that she said, I haven't put up income tax, but so many more people will be paying it and at higher rates.
Yeah, absolutely. And I mean, this is a problem. I mean, there are people who have started their working lives who have never, ever seen the tax band go up at this point. I mean, this is since 2022. These have been frozen. And it's dragging more and more people into the 40% and the 45% tax bands. In fact, the proportion of people who were paying 45% income tax has doubled since 2021. And the proportion of higher rate taxpayers has gone up by 50%. Now, that really is us redefining what we mean by broad shoulders. The IFS did a very good piece a while ago pointing out that I was little as kind of like 10 years ago, like almost no nurses paid 40% income tax, and now we're up to something like 1 in 8. And as you go steadily up, you've got more and more teachers, more and more, basically normal people being sort of described as 40% taxpayers. And the problem is that we're now at the point where this seems to be the go-to get out, because obviously it's a big stealth tax. I think people are aware of fiscal drag now because we've been talking about it for long enough. You still don't feel the pain in your pay packet immediately. And I'm afraid that I can see this continuing for the foreseeable future until, as Stephanie says, we've got governments that are willing to take some difficult choices. And I do feel, the OBR forecast was much more optimistic than most people had thought, and that's one thing that's bailed her out here. And it's enabled her to do the kinds of the extra spending on welfare that she swore off a year ago because we couldn't afford it.
Is that because, Stephanie, there's something good on growth here, or is it... wages went up more than expected this year, didn't they? And that was the reason that she wasn't in quite as tough a place as she feared a couple of weeks ago.
And interestingly, in the same year that the Office for Budget Responsibility has been looking at this kind of long-term failure of productivity to come back, productivity growth being the most important thing for raising living standards and growing the economy. In the same year that they were saying, OK, we're just going to give up, we are on a different path now from the global financial crisis, and we're going to have to... And that was one of the reasons why she had to raise that extra 20 billion, quite on top of anything else that's happened. The productivity this year has actually been higher than expected, and it is possible... there is a story to be told by this government on what they've done to ensure continued growth of private investment, which is actually higher today even than it was a year ago, despite all of the talk of chilling business with the tax rises last year. They've ensured that public investment continues to be stable as a share of GDP rather than falling. So there is a sort of long-term growth story that this government can tell. But I agree with John. Having dodged that sort of crucial... let alone people joining their working life. Rachel Reeves wasn't born the last time a Chancellor raised the basic rate of income tax. We've had the 50th anniversary this year of Dennis Healey doing that, and nobody else has dared do it. Now, we wouldn't necessarily go back to the rates of income tax that we saw in the 70s, but I do think it speaks to, it's easy for us to say, perhaps, but a braver decision on income tax would have been better for the tax system and actually, would have been rewarded by the markets because it would have been more front-loaded rather than this stealth attack.
Yes, and you're right to point out that when we get all these sort of piecemeal measures, a number of voices have pointed out to us in the last couple of days, it does take a little bit longer for markets to work out what they think of them because there's so much in there. Stay with us. Let's just get a quick update from our colleague Chloe Meley, who's been watching how individual stocks have been responding. And Chloe, I've been quite drawn to the outperformance of the FTSE 250 here. I'm sure you're going to take us through what we've seen across a number of sectors, but those linked to trading seem to be doing pretty well. What stood out to you?
Yeah, so house building is really what stood out to me at first. So it actually is a sector that, first of all, took quite a bit of a beating, and that was because we got confirmation that we had the so-called mansion tax, so the tax on properties over £2 million, as well as higher taxes on investment income, which would hurt property investors. And, of course, analysts saying that this could lead to less confidence in the housing market, fewer housing transactions, and therefore a tough time for the house builders. But then they have reversed some of those losses, and we are seeing now that Barratt Redrow is actually ticking a little bit higher. Part of that has to do with gilt yields actually edging lower, and that is helpful for those builders, and therefore we are seeing quite a lot of yo-yoing there, but now we are mostly flat in that sector. Another thing that stood out to me was the gambling sector. So the UK is planning to reform gambling duties to raise £1.1 billion in taxes, and that really led Evoke lower. So Evoke owns the William Hill betting business, and that was took quite the beating on the back of that. But it seems that this impact is actually priced in for Flutter and Entain, which owns Ladbrokes. So again, an unclear kind of impact there. And finally, on a positive note, the wealth managers, the companies operating in that wealth management sector, are doing quite well on the reforms of the ISA system, the ISA being the savings account, and the cash portion of that allowance will be cut, and that is to encourage investors, savers, to invest a little bit more into stocks, which would potentially help that UK stock market London, which obviously needs it. And so we can see some positive movements across that wealth management sector, with St James's Place in particular up more than 5% this afternoon.
Thank you very much, Chloe Meley, with an update on some of those sectors that have been on the move as we've been listening to the Chancellor speak. I just want to correct a graphic that we put on the screen a little bit earlier on around UK pension contributions. So UK pension contributions above £2,000 will no longer be exempt from national insurance contributions. So just to make that clear and to correct what we previously put on the screen, so that is out there. So let's come back to you. I mean, we've seen John. You've no doubt got things to say here about what's happening with those wealth managers. The fact that we've seen those stocks go higher, because there's been a lot of talk about, and there are more taxes on dividends and all kinds of other things.
Well, I do think that's interesting, just noticing that there. And I think there's probably a couple of drivers for that. I mean, one is the headlines probably, they changed the ISAs.
Yeah.
So restricting the cash to £12,000, except for the over 65s. And, people having to put £8,000 into their kind of stocks and shares ISA. I'm not sure that entirely explains being up 5%. I think a lot of that might also be to do with the fact that people are going to be sitting there going, wait a minute, how do I manage my money whenever the dividend tax has been bumped up by 2 percentage points at the basic and the higher rates from 2026? And when from 2027, we've also got savings rates going up by 2 percentage points, and that's on interest rates. Properties, so being a landlord, effectively she's charging national insurance on unearned income.
Yeah.
And what I think's possibly happening there is that if you're a landlord right now and you are still in the landlord business, then you are a masochist. I suspect that what's happening is that St James's is going up because they're thinking these people are going to be liquidating their portfolios and sticking the money into stocks and shares.
Right.
They've done so much better than the property business for a long time now.
And the fact that you're having to think about this and the impact of it is interesting. I just wanted to mention that Rank Group, as we were talking about gaming companies, they're up really strongly. That's on the back of the bingo comments that she had to make, no doubt.
Yeah, no, probably. I'm just wondering, I mean, there's a lot of things. I think the fact that there's so many complicated things going on, has people reaching for their advisors or thinking, actually, I can't manage this anymore. I think if you're... I would have thought there's very few financial advisors. I mean, certainly in wealth managers are not going to be advising people who have cash ISAs. So if they are, that change to the ISA limit as well, with that people, it may not be a very large number of people who were contributing 20,000, but somehow a large chunk of that was in cash. But I think there will obviously be that additional money flowing into stocks and shares, or at least the Chancellor is hoping.
Politics all over every budget, Stephanie, and this one no different. I mean, the child benefit cap had been something that had been talked about for a long time, and she wanted to deliver that for the backbenchers, I suppose.
Yeah, I mean, what's interesting about this is you would have said, a few months ago, you would have said, they're fresh off this really quite humiliating climb down over the welfare bill, leaving them with money to have to actually pay back. Instead of getting savings, they actually had to find some money in this budget for the welfare bill. And you might have said, OK, if she's looking at some tough decisions, maybe she's going to be raising the headline rate of income tax, breaking her pledges. How would she sell that to her party? Oh, maybe do the child cap, lift the child cap. And you could have seen that as a kind of bargain of a modern Labour government. But you've seen them back off the tough decision on the income tax, but still make the concession, if you like. I mean, you could also say major contribution to their child poverty goal. Yeah. But, she's taken that step without anything in return, if you think of it in those terms. There's some vague discussion in Westminster that there will be down the road less opposition to welfare reform. Okay. But it's pretty ephemeral.
Yes, right. A lot in that speech, the OBR's statement beforehand, and then in the Chancellor's speech. But thank you very much to our Head of Economics and Government here at Bloomberg, Stephanie Flanders. Thanks to John Stepek, Editor of Bloomberg's Money Distilled newsletter. Sign up for the newsletter. It's good. And we